Most contractors think about insurance while the job is active. What almost none of them think about is what happens 6 months after the job is done. Because here's the part that nobody tells you. The work you finish is still your exposure long after you've packed up and moved on. Stick with me on this one. If you've been in business more than a couple of years, this is a blind spot worth closing before it costs you. Let's start with what completed operations actually is. It's the part of your general liability policy that covers claims arising from your work after it's finished and you've left the site. It's built into the standard commercial general liability policy, which means that you very likely already have it. It covers bodily injury and property damage that your finished work causes to others, and it's a separate category from your ongoing operations, which covers you while you're actively working on the job site. Ongoing operations protects you during the work. Completed operations protects you after. Now, here's the distinction that trips up most contractors. Completed operations does not pay to repair or replace your own faulty work. It pays for the harm that faulty work caused to other property or people. Say you install a floor. A year later, it fails, and the failure caused water damage to the property below. Your completed operations coverage pays for the water damage to that other property. It does not pay to rip out and redo your floor. That's called the damage to your work exclusion. The policy covers the harm your work caused to others, not the cost to fix your own work. Knowing that line matters before you assume you're fully covered. Here's the part that surprises people. How long are you actually on the hook? In most states, the statute of repose lets someone file a construction defect claim up to 10 years after the project is completed. Some states allow even longer for certain bodily injury claims. Your exposure doesn't end when the invoice is paid. It can run for a decade. A roof you installed in 2020 that fails in 2028 can still come back to you. Now here's the trap. And this is the one that catches contractors who retire, who switch carriers, or just let a policy lapse. Completed operations coverage generally has to be active when the claim is filed, not when the work was done. Let me give you a scenario. A contractor builds a house in 2022. He retires and cancels his policy in 2023. In 2024, a floor fails and someone gets hurt. The claim happens after the policy is gone. There may be no coverage at all. Canceling your policy can erase protection for every job you've ever done. If you're thinking about retiring, switching carriers, or letting a policy lapse, this is a conversation to have before you cancel anything. So here are 3 things to check on your completed operations coverage. First, confirm your policy includes products completed operations coverage and look at the separate aggregate limits. It's distinct from your general aggregate and it can be used up by a single large claim. Second, if a contractor requires you to maintain completed operations coverage for a set period after the job, often 1 to 5 years, confirm you're actually keeping it active that long. And third, before you ever cancel, retire, or switch carriers, ask your agent what happens to coverage for your past work. Don't cancel blindly. If you've been in business a while and you've never looked at your completed operations coverage, or if you're thinking about retiring or switching carriers, that's worth a 15-minute call before you make any changes. Book directly at the link in the description, or you can give us a call at 318-423-7445 or go to callwatley.com. Next week, we're getting into contractual liability, the clause in your subcontracts that can turn a contract into a personal guarantee. That one drops next Tuesday. I'll see you then.